Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Masser, along with Alexis Christophers, in for Tim on this Thursday. Let's take a look at some stocks in the move today. And with us is Bloomberg News equities reporter Alexandra Semenova. Alex, retailers, they've been front and center for the last couple of weeks reporting earnings. Dollar General out today.
And we're learning something about the macro picture with this stock, that consumers are hunting for bargains. So perhaps they're not doing as well as we're hearing at the headline level. Dollar General raised its full year outlook, showing that value-focused retailers are doing very well as people are looking for cheaper items. Their stock is rallying about 12% right now. So good for the company, but a sign that perhaps people are struggling with still very high costs.
I think it's interesting when you're looking for value and good deals at Dollar General.
Exactly.
Like how much,
Dollar
right,
Tree yesterday came out with very good earnings and raised guidance. And aren't they seeing higher income earners?
They are, yeah.
Shopping
And
there.
another company that is kind of telling us something is Walmart. There was a really good point made today by Jim Paulson, veteran strategist. He said that when Walmart outperforms global luxury retailers, that's a sign that typically U.S. consumption is not doing very well. And typically it precedes slower GDP growth. So perhaps some of these low income focused names are a sign that maybe the economy is in a little bit of trouble.
Read the tea leaves there.
Exactly.
All right, so Dollar General, DG down 12%. I'm just taking a look at Walmart. It's flat today, but yeah, it's interesting to see that in terms of the narrative. Where do you want to go?
I want to go media. I mean, this bidding war for Warner Brothers Discovery is getting confusing. It's getting ugly. Paramount Skydance now has something to say. They're accusing them, right, of not playing fair.
Yeah, Alexis, getting ugly is right. It's really contentious now. Paramount, one of the buyers vying for Warner Brothers, accused it of failing to conduct a fair auction. They sent a letter to CEO David Zaslav saying that the company is not acting in shareholders' best interests. Look at the stock today. It's down about 1%. In a response, Warner Brothers said it had shared the Paramount letter with its board. As we know, it has been officially put on sale in October after receiving an offer from Paramount. It also has interest from Netflix. It has interest from Comcast. So it's been really heated, and people are getting...
And some are saying that Netflix is now the front runner, and mostly cash bid. We don't know for how much.
Yeah,
but apparently it's more than what Paramount bid.
Yeah, but apparently Paramount clearly disappointed here. They feel like they're not getting a fair chance.
Well, you brought up too, like on our morning call, like, do we know what the prices are, or we don't know completely?
There
with this
have been
second round?
some numbers out, but
I mean, 60 billion was like the last thing I saw publicly, so it's got to be, you would think, north of 60 billion.
Exactly. It's changing every day. And
also,
I want to point out that Paramount is the only one of them that is actually trying to take over the entire company. So it wants to buy... it's CNN,
TNT.
Yeah, exactly.
Yeah, let's remind everybody, Warner Brothers Discovery right now is a $60 billion market cap company. So
they're looking for a little premium. Give them some premium.
I would think so.
Paramount also raised the breakup fee to $5 billion from $1 billion. So they're basically saying, look, we think we're going to get regulatory approval if you guys choose us.
Yeah, lots of big numbers here.
All right, Meta, certainly a company we've been talking about a lot today, and it's higher.
This one is interesting because, as we know, Facebook rebranded to be Meta Platforms, and here they are saying that they're going to cut resources for building out the so-called metaverse.
This story.
That hasn't served them well. Mark Zuckerberg seems to want to scale back on this business endeavor. He once framed this as the future of the company. It was all about the metaverse, and then we kind of stopped hearing about it in the last few years. Executives are apparently considering potential budget cuts of as high as 30% for this part of the business, and they could see layoffs as soon as January. Apparently, these discussions were had in a closed meeting at Mark Zuckerberg's compound in Hawaii as they were deciding budget plans.
Gonna have a meeting. Why not do it there?
I mean, sign me up.
Investors
feels a little.
Yeah, investors clearly like the news, though. The stock is up 3.5% right now.
Got to say, an incredible scoop and exclusive by our own Kurt Wagner.
Yeah,
it's incredible
really good
reporting.
story.
But it's something we talked about too, that, investors and analysts have kind of wanted this. So it's the company saying maybe
it hasn't been really generating much for them. So
if anything, they thought it was a drag on resources. Yeah. But I guess in a coup for Meta yesterday, they stole away an Apple design exec, right?
Yeah, that's also been interesting to see some of the hiring going on between these Mag 7 companies, just poaching talent.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.